Once ranked as the leader in the most competitive global economy in the world, the United States, for the first time ever, has now fallen behind. The financial crisis of the past 2 years has caused negative consequences on every aspect of the investment world, affecting not only the stability of Wall Street and capital markets, but also many businesses across the nation. And today, many experts feel the United States is in danger of reversing much of the progress it has accomplished over the last 200+ years.
I think the main reason that we're in danger of reversing 200 years of progress is that our politicians in Washington really do not understand how overly complex tax and regulatory environments distort the markets and result in a major misallocation of capital.
And there are many negative consequences resulting from a poorly designed tax system and regulatory environment.
Markets allocate capital to their most profitable use, and that's fine as long as profits are aligned with society's needs. The problem with differential tax rates and an overcomplicated tax code is that profits can be derived from economic activity not aligned with society's needs. The consequences are that we get rolling booms and busts, an over-leveraged society. Manufacturing has incentive to produce outside of this country and create jobs outside of this country. And all these things can be reversed with a simpler tax code and a more simple regulatory environment.
Many experts also believe that financial innovations contributed to the fallout, where Wall Street profited at the expense of Main Street.
The problem with financial innovation is that it doesn't directly fund any underlying business activity. No factory ever got funded through a credit default swap or an oil future. They're purported to help business managers manage risk. However, in reality, what we find that they do is they allow our financial institutions and hedge funds to redirect tax dollars from the government coffers into their Wall Street bonus pools.
Rather than altering the market or passing new taxes and regulations, today there is a widespread consensus to revise our nation's current tax system and pass a flat tax to spur economic growth and bring America back on top.
A flat tax is simpler to understand, easier to comply with, and cheaper to implement. At a deeper level, it also eliminates any tax arbitrage opportunities and makes the system that's more economically stable and better for economic growth. Our current tax code has over 71,000 pages of rules and regulations. That sheer volume ensures that we're going to tax the same activity differently depending on how that entity is legally structured and who the beneficial owners are.
Many economists are attracted to this idea because of how the current tax system's high rates and discriminatory taxation of saving and investment, which can reduce growth, destroy jobs, and lower incomes.
Wealth creation, job creation, and higher standards of living require effectively developing solutions that better meet society's needs. In order for America to remain competitive globally, we have to do a better job of providing solutions that meet society's most pressing needs. That requires 3 things. First, we need our best and brightest focused on developing products and services that win in the global marketplace. Second, we need access to affordable capital to fund those ideas. And third, we need access to the global markets in order to sell those products and services. A flat tax levels the playing field and removes distortions, thereby aligning incentives between government, business, and customers to get capital to provide the products and services that best meet society's needs.
For 12 years, Ironbridge Capital Management, an investment firm based in Chicago, Illinois, has been specializing in companies that create wealth for its investors.
Ironbridge exists to participate in the wealth creation that occurs in a capitalist economy where capital is free to earn its highest rate of return. As active participants in that process, we seek to identify companies that are innovative, increasing productivity, and creating wealth, and therefore our clients benefit by achieving an excess return. Another example is the healthcare system. We need to lower healthcare costs. A company that we invest in, Intuitive Surgical, offers robotic surgery. This lowers the cost of various procedures and increases the success rate and lowers the hospital days required for recovering. So hopefully everybody can see how directing capital towards funding productivity and innovation results in higher living standards for society.
As America adapts to a new era in the global economic landscape, maintaining its proper framework will be crucial to protect capital markets, drive productivity and innovations, as well as encourage wealth creation.
I don't believe America will go into decline. Capitalism survives because it adapts, and we're adapting today. Basically, in Washington, tax reform, regulatory reform, and entitled reform have taken the priority for this next election. And we have one side of the aisle which says we need more tax, more regulation, and more entitlements. Another side says we need less tax, regulation, and less entitlements. In reality, what we really need is a better tax system, better regulation, and better entitlement programs. And we call this the self-correcting mechanisms of government, and we're living through that today, right now. In the end, I think we will get a better tax system, a better regulatory environment, and a better entitlement system. And the U.S. will continue to prosper, because when we get these things, we will get better capital allocation, more wealth creation, higher standards of living, and more job creation.
To learn more about Ironbridge Capital Management, visit ironbridge.net.